Businesses experience cash flow difficulties just like individuals, so that's a main reason why they may wish to sell off assets in order to generate cash. Remember, fixed assets have a lot of money stored within them. These are things like vehicles, property, land, machinery, and therefore this is something that businesses can pull upon if they need to generate cash. Not quickly, but relatively quickly compared to selling shares, for example. Of course, if you do not use an asset any longer, it might be prudent to sell it because it's just taking up space and you're having to pay for maintenance costs. But what are the problems with selling off assets to generate cash? Well, of course, if you sell an asset, you're unable to use it anymore, which means that whatever job it did previously, whether it was a van or a machine, you can't do it anymore. The only solution to this is, the only caveat, of course, is sale and lease back. Some businesses specialize in buying machinery from other businesses and leasing it back to them, essentially renting it back to them. However, that's not going to be applicable in all cases. Another reason why businesses are often reluctant to sell off assets in order to generate cash is because of depreciation. That essentially means that an asset has lost value over time. You might have bought a van, but because of use and mileage, it will be worth less, in some cases significantly less, than what you bought it for. This means that businesses will not necessarily get back what they paid for an item. Of course, there are exceptions. In some cases, like property, building, or land, businesses might get as much, if not a lot more, than what they paid for the asset in the first place, which can be an attractive reason to sell off an asset in order to generate cash. On the flip side, you're essentially selling off an asset that may appreciate in the future. This means that it may go up in value. So, of course, by selling it off, you are forfeiting this potential increase in value, and therefore there is an opportunity cost involved in selling off an asset to generate cash. With some assets that you wish to sell to generate cash, you might have to spend money on advertising. Now, of course, advertising costs money, which adds to the cost of any business, an expense rather than a cost of sale, of course. This means that even though you're selling off an asset, you have to speculate in the first instance in order to accumulate later on. This might put pressure on short term cash flow. A final reason why businesses may be reluctant to sell off assets in order to generate cash is because if you sell a fixed asset, it will reduce the fixed asset figure on your balance sheet, and therefore it will make your business essentially worth less. This will therefore be less attractive to potential shareholders and investors. That may be a reason not to sell off your assets.